YouTube, Instagram, TikTok, and maybe Instagram. There you are. All right. Hey, everybody. Why is that screen not on?
I'm working on it.
Okay.
We're live, so you have to look at the people there.
All of them? All 4 billion?
I don't know if we're at billions yet.
We're not billions yet?
Turning from a milli to a billy, dude.
All right, guys. You know the routine. We're here to answer your home loan questions. We're here to answer about programs, first-time home buyers, investment properties, about your credit score, about your this, about your that. So there's a whole lot of stuff that goes on in a person's mind when it comes to buying a house. We want to ease all your minds, answer all your questions, get you down the right path. I do want to start with, and I want to talk about this in the middle somewhere, is there's a slew of programs that fit pretty much anyone. So if you're bringing in some money to make payments, if you have money set aside, you could buy a house, even if all the traditional ways don't check out, okay? Right now, it's a very difficult time for many people to buy a house because, maybe they don't make enough money. Maybe they don't have the best credit. Maybe they don't file the appropriate amount of income. So there's a lot of different challenges with loans. Lee and I are up to fight all of them. And the truth is, we win a lot of them, okay? We win a lot of these arguments and fights when it comes to you can't do that, you can't do that, you can't do that. Even the loan officers here on this feed that hop in sometimes say that's wrong, that's wrong, that's wrong. But the proof is in the pudding, guys. We deal with very tough loans. And by doing that, we become very sharp, very strong. And we know how to argue, we know how to fight, and we know how to package. So all that being said, what's going on today, man?
Well, I'm trying to get everything up and rolling here. It looks like we're starting, but I can't make sure. We're on live on Facebook, Instagram, TikTok, and YouTube. Sometimes, no sound. Thank you. Working on it. Can you hear me now?
No.
Can you hear me now? Can you? Thank you, Connor. Thank you, Roland. Appreciate you guys very much. No P, Mr. Sound.
How about now?
Can you hear me now?
Can you hear
How
me?
about now?
Can you hear me?
I'm going to do my version of sign language and try not to get canceled.
See, that's the problem.
Why?
They can hear me. They can't hear you.
Canceled.
You're not even making any noise.
You're doing wrong, and we're going to end up. Oh, here we go. Dude, I'm in trouble. I'm going to be in trouble. Hey, we appreciate you guys. Roland, Connor, we're here to help you get a house in 2024. Thank you for letting us know the sound. How do we sound on Facebook, on TikTok, and YouTube? YouTube's ghost town, man. We can't get a following on YouTube. Hey, nobody cares about us on YouTube.
Mr. P, why do you say you shadow banned? Is it because of the sound, or was it something else that you identified?
Are we? Oh, shadow banned. Oh, shit. I hope not, man.
Tell me about that, Mr. P. Why do you say that?
I really hope we're not shadow banned. Well, we got a lot of copycat accounts that are working, and they're shooting at us. And they actually come on, and they act like us. We had a client call us and say, hey, you reached out to me and told me you'd fix my credit for $150. And I paid it. And I'm like, no, we don't do that. We don't. And he said, yeah, I figured it out after. It was a scam. And I'm like, oh, well, he was like, oh, and then he told me, and I'm like, yeah, we got to do something about this. So we actually put our videos, on our videos, if you look at our videos now, it says we go live from 11:30 to 12:30 Pacific Standard Time. And that way, if you have any questions, you can ask us live. We are going to teach you a house. We're going to tell you what the interest rates are. We're going to tell you whether or not it's a good idea to get a down payment assistance program. What's happening in the economy? What do we anticipate the rates to do? This is what we anticipate them to go down. And it's not just Chris and I, just sounding off each other going, hey, you think the rates are going to go down? I think they're going to go down. I don't know. What do you think? No, we follow some very important people, and we know what's going on in the economy. We help you guys get a house in 2024. Go.
Let's start this bad boy off with a commercial.
Hey, if you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by calling the number on the screen. Don't call it right now because we won't answer. We're live, but we will answer your questions right now on the live. This is going to disappear in 5, 4, 3, 2, 1.
Booyah. All right, let's start it off. Tanner, did y'all hear about Ishiba voicemail?
No, tell me about the Ishiba voicemail. I don't even know what that is. Ishiba. I know that there's I own some crypto.
Shiba Inu.
Shiba Inu. Yeah, I own some crypto on that situation. So I don't know what that is, but let's talk about it.
Shiba, UWM. Estancia Solar by Leslie. I sell car fresheners. Leslie, you probably need to hop on one of these feeds Go ahead and start following these because I have a plan for you if you want to boost that business. Take a screenshot in 1, 2, 3, out.
Matashiba, UWM. That usually means we're talking loan officer to loan officer. That usually means there's some tea.
Is he the CEO? Is he trying to steal everybody's loans? Is that what's going on, Tanner? Tell us.
Tell us. And I think you're an LO, Tanner. I appreciate you showing up, man. We appreciate all loan officers. We appreciate the realtors. Hey, if we can teach you something, that's great. There's a few accounts I follow on here. I learn something once in a while. I'm like, I don't know if that's correct, but I got to dig into the guidelines. Oh, my God, it's correct. Oh, shoot. I'm glad I learned that. It's usually tiny nitpick stuff, but we're good at it. What do we got?
So, guys, everyone's asking us a lot of tough questions right now. A lot of people are going through underwriting, not getting approved. There's a whole lot of challenges. Just to let you know, we deal with these files. We want these files. So if you guys are having a challenge getting your loans approved, underwritten, and getting into a house, call us because those challenge files, we love them. That's actually how we started the business and earned a brand for ourselves. We said, give me all your turn downs. Give me all your turn downs. And we were able to make a lot of those work and created a good name. So if that's you, reach out.
And Tanner, if you're an LO, look up the Matashiba voicemail. Send it to me. Please email it to me. I want to hear about it. I want to know about it. And again, if you're an LO, hey, we appreciate you. I don't care if you're a broker, direct lender. I don't shoot at you. I tell the truth. And a lot of loan officers don't like that because their commissions hide behind people not being very uninformed. But if you're one of those guys who's okay with all the data on the table, and let's figure out how we get the client the best deal, because that's really how you build a business long term.
Yeah.
If you're really good with that, then I'm gonna be your fan, dude. I'm your advocate. I'm your fan. We're gonna work together. I'll help you out. I get it. There's a lot of loan officers out there. There's good ones. A lot of my friends are good loan officers. Yes. I don't mind if you go to somebody else. We just bring it up here. Do we help people in Idaho? I was just talking to somebody about an hour ago about buying a place in Coeur d'Alene, Idaho. Beautiful place. Yes, we do. We help in all 50 states. How many?
50.
How many?
50.
All of them.
Yep. Alferny, dumb question. No such thing. Yes, there are. But father would co-sign on a house. What are the risks for both parties?
Very good question, Alferny. Well, the risk is if you default on the loan, they're going to foreclose. That's what's going to happen. And if they foreclose, it's going to be on your credit report for a very long time. You hear 7 years, but it's more like 10. So it's going to be on your credit for a very long time, very long time. So if somebody co-signs with you, make sure they know that that's the risk because you both are liable for the loan. And if you're both occupant co-borrowers, then you'll both go on the deed, at least at closing. So that's the risks.
Yeah. If you're both on the loan and you both default, you both default. There's no such thing as, well, I'm just the co-signer, I'm just the primary. No such thing, guys. It's all one and the same when you're losing a house. So even your lates, foreclosures, notice of default, all those little milestones will affect you, Alferny. But the truth is, if you can pay rent, if you've been paying rent and it's always on time, it's the same thing as a mortgage. The mortgage doesn't have to be that much bigger than your rent payment, depending on where you live. Connor, I racked up $25K of credit card debt when I was 18, 24 now, paid it off, 800 score now. So crazy to have a golden score. Yeah.
800, dude. 800 is amazing. There's very few people in the 800 club. We call it the 800 club. Very few people. Congratulations. Keep that up. By the way, it's easy to drop from 800 to 760. One tiny little blemish because the way the credit algorithms look at it is you're doing everything perfect. In order for you to miss a payment, it's not an accident, not at someone who flies at 800. Something happened in your life and they go, oh, this could be the indicator of something more happening. Yeah. Be very careful. Keep that 800. It will pay dividends in the future. I'm telling you. People ask me all the time, what's better, an FHA loan or a conventional loan? And I'm going to say, what's your credit score? Why? Because the MI, I priced an MI yesterday. I couldn't believe this. I actually called Chris over. I'm like, does that say 3.07? MI?
Never seen it that high.
And he's like, let's rerun it. This doesn't sound right. 3.07 MI. That's crazy. Crazy. Anyway, and then we pulled FICO score, 622. 622. Just barely above qualifying, but that MI was insane. Yeah, so anyway.
No Limit Society. How do I get some help as I have a 640 score and would like to be a homeowner but need help starting.
You tell No Limits.
It's so easy. No Limit Soldier. What you need to do is either screenshot this. I'm going to hold it up for a couple more seconds. And you're going to call one of these numbers when we're not live.
Yeah.
Or you can text us right now and we'll get back to you as soon as we're done. Or you can go to the link in the bio and you're going to select apply for a home loan now. And it's going to walk you down the path. Takes you about 2 minutes to fill out, a few more minutes to upload documents, and you're on the right path. Now, what we'll do is we're going to figure out exactly what you qualify for. We're not just going to go FHA. We're not just going to go conventional. We're going to figure out exactly what you qualify for, figure out the best deals, and then say, hey, No Limit Soldier Society, which one do you want? What's better for you and your family? And then you're going to let us know, and then you're going to buy a house.
So, like, here's when that plays into effect. I'm working on a loan right now where the person's trying to buy a house in Temecula. The purchase price is $767 in Temecula. Now, when I run FHA, the limit on FHA is $644, somewhere in that range. So that's 17% down. It's too much. So then I flip it to conventional, and the conventional limit is $766, right? $766?
Yeah.
It's $766. So with that, I can get away with 5% down. So that's why we run the different scenarios, FHA, conventional, Fannie Mae, Freddie Mac, and so on and so forth. But we'll find out which one is best for you.
Yeah, new Lennar condo not accepting VA or FHA. GJJ Skilla, I think I have an avenue for you.
Oh, new Lennar condo.
Where at?
For you, dude. I love listening to the builder hiccups because builders are dirty birdies, man. They invested a lot of money. They built a house, and to a degree, they kind of get to say the rule. But it bites them sometimes. And there's a lot of money in this business. If the builder can keep out the loan officer and the realtor, they make a boatload of money. Boatload. You want to know how much is a boatload? Ask me.
DJJ Skilla, that's a lot of J's. You're in Riverside, man. We're in Riverside. Come see us.
Yeah, Riverside. He's right there in Riverside. I'm right here in Riverside. Check that out. We're all in Riverside.
So check it out, DJJ Skilla. We might have an avenue for you. There's a lot of places that aren't FHA, VA approved. There's some that aren't even Fannie and Freddie approved. It's very strange. That being said, we like I told you, we deal with the hardest stuff. We're not the cookie cutter loan officers. We can slam dunk those, alley-oop. Lee can do it with his eyes closed. But when it comes to the challenges, we got your back. We're gonna work for you. We're gonna do everything we can to try to make that work. So please reach out. We'll get you into a home. Arizona rent is crazy, said Al Fernie. Peachy, hi, pay stubs are required at the beginning and end of home buying process? Question.
Peachy, maybe and maybe not. Maybe and maybe not. So, we do have something called a W-2 loan. What's a W-2 loan, you ask? Thank you for asking that, Peachy. That's a very good question. Well, let's just say you filed your 1040s and you have a lot of write-offs. We don't want nobody to see it. I don't want to see it. We sure don't want the underwriter to see it. But you're a W-2 employee. Well, I flip it to what's called a W-2 only loan. And now I go, hey, give me your last two W-2s as long as they're consistent. And if you had the same job for the last 2 years, it's easier. So if you give me the last 2 years W-2, and then I'm going to order a VOE. VOE is verification of employment. And that VOE is going to say, hey, he still works here. I don't want to see what's going on because I'm going to use the W-2 and current to qualify you for your new loan. So, in that situation, it's not as stringent, but the interest rate's a little higher, just a little bit higher. So, it depends on the type of program we're going with. Sometimes there's Social Security driven programs, VA disability programs, pension programs. There's a bunch of programs out there where I may not need the same types of documents.
There you go. Connor Amato back. Yeah, when I got my mortgage last November, it was $650. Hard to buy down. Just got to a 7.75. That's everybody else, man. It's not just you. It's a tough market. Alferny. Also, I think it has been answered on one of your TikToks before, but could you leverage tenant rent?
Oh, good question. Alferny. I'm going to answer this with some little technical tiny pieces in it, okay? So, can you do a 4-unit Fannie Mae Freddie Mac with you living in one and using the rent for the other 3? The answer is yes.
Yeah.
Can you do it on FHA? The answer is yes, but here's a little asterisk right next to that. There is a qualifying extra overlay that you have to pay over 25% in order for that to work. It almost always does But we're in a market right now where the interest rates are so high and prices are so high that it could fall on the other side of that. And I have to be ready with the backup plan of a conventional instead of an FHA. So yes, you can do it.
Heck yeah. Dennis, the tech guy in the house. These guys are awesome. Seriously, we'll take care of you and guide you to a home.
We appreciate you, Dennis, man. We try real hard to give everybody the honest truth. The honest truth. And I tell the loan officers when they're on here, hey, you might love me, you might hate me, because I'm going to kind of out everything. I'm going to out whether it's a good idea to refinance. People are like, loan officers, well, we make money off commission, so we want you to refinance. Well, based on the Fed projections, this is where we're at, 5.25 to 5.5. Over the next 3 years, it's going to go down a lot. So when people say, is it a good idea to refinance? My answer is maybe and maybe not. Here's why. Because if you're going to refinance, you want to do it once at the bottom. At the bottom, if you're just doing raw numbers. Well, what does that mean to a loan officer? That means that I'm not going to get your business for 3 years. And that's going to cost me $5,000 every year when I tell you, hey, it's a good idea to refinance because rates are down a point, and they're down another point, and they're down another point, and I could be making $5,000 every time I get you to refinance. Well, that's good for the loan officer, horrible for the client, because he has to keep paying for that refinance fee and starts his 30-year clock over and over and over and over again. So if you do it correctly, you refinance once, you refinance to the bottom, you buy your rate as deep as you possibly can, legally or financially. You buy it that deep, and then you never touch it again. That's the proper way to do a refinance.
I'm going to act like I'm a viewer, okay?
Okay, go.
So I heard you guys say that you guys spent over $20,000 each buying down your loan. What if I don't have that kind of cash?
Well, you go with whatever the par rate is, and there's some little tiny things I can do to help you buy it down a little deeper.
Okay, I'll answer this one.
Okay, good.
We're going to use the equity in your property, not cash.
That too, yeah.
Not cash. So it doesn't come out of your pocket. It will increase your loan amount. And there is a weird teeter-totter that we have to play. But we'll use those funds to buy down your rate so you get the best payment for the next 30 years.
Stevia Lopez. Stevia Lopez, too. The two smartest mortgage guys I know. When is it going back down to 3%? I appreciate you. I don't know if that's with sarcasm or sincere,
No
but
sarcasm.
I take it sincere.
My fans are serious.
I don't actually think it's going to go back down to 3. I think you'll be able to buy into 3. But based off of this is the Fed funds. You can go find this at FOMC.com. You can and Fed funds right now is 5.25, 5.5. That's what the rate is right now. Over the next 3 years, they anticipate the Fed funds rate to go down to 2.5. That's the Fed funds rate. Now, if you understand the market, the Fed funds rate influences the 10-year yield, and usually there's 100 to 150 basis point spread in the yield, which would mean we should be in the 4s. That's just guesswork. But if we're in the 4s at par, you can buy down to the 3s with some cash money. When do I think that's going to happen? 2026, 2027, somewhere in that range. That's when I think it's going to happen, but subject to change.
Clips wants to know if we've ever worked with a copywriter. Clips, I have a little bit of a disdain for that statement, but I give everyone an opportunity. I do, but here's why. Everyone starts with like, yeah, let's build a partnership, let's build a business, let's do it together. And then slowly but surely, they start asking for a salary. They start asking for a base. And they're like, well, I can't continue doing this. Well, I understand that. You need the balls in order to keep trucking forward. You need the ganas. You need the ability to just say, you know what? I'm going to build my life no matter what it takes. So if you got that attitude, reach out to us. I'll entertain what you have to say.
We've had a lot of people ask us for copywriter, and I'm like, what do you mean by copywriter? Are you trying to script what I say? Are you trying to be a writer in Hollywood and for my videos and write down the words that I say? Because the truth is, somebody asked me the question, I have the knowledge, I spit it out. I don't really filter it other than, hey, don't cuss that much. I cuss a little bit sometimes. Don't cross any guideline laws. Make sure you put your NMLS as often as you can. 944254, yours is
1066958.
And we make sure we put it out there for legal reasons.
Tell them your BRE.
Yeah. My BR, I don't know, very 015 something.
Just kidding.
I don't use that one very much. Yeah.
Jada88 just went through the pre-approval process, got denied, worked with a lender, a broker, a realtor, still got denied. What do you got to say about that, Lee?
I say we got to find out why you got denied. We got to find out why. Because when we get, and the word denied is like, it's like, hey, I couldn't get qualified. Denied is when you're in an escrow and the loan is going through the underwriter and there's an actual technical word called denied. And when it hits denied, if it's FHA, it's going to go in the FHA file. If it's Fannie or Freddie, we try and get loans not denied because we don't want that word anywhere. We want it withdrawn and not qualified yet. And yet is the appropriate word. Because if you're not qualified yet because you got a 564 FICO, well then let's fix that FICO. If you're not qualified yet because you don't have enough income, well, let's figure out what the appropriate purchase price is, or bring a non-occupant co-borrower or even a co-borrower on so that we can make sure your income goes up so we can qualify you. So there's lots of reasons that we can find out where you're not qualified yet. I don't like the word denied.
Yeah, I would say not approved yet. They're not able to approve me. So we can work with that. Hey, if you guys see me do this, it's because I'm checking on my puppy who had surgery yesterday. And if you want to see her, hang out to the very end. I'll show her.
Okay, cool.
Paranoid,
what's the lowest rate you can get to the buy down? Is 4% possible if I pay for it? Probably not. Probably not. Probably not. So, paranoid, nobody. Oh, dude, I love that name. I got to back up. I got to just take a second to take in that name. Are you paranoid? Nobody. Nobody. Nobody's paranoid. Who's paranoid? Nobody. Nobody's paranoid. Okay, anyway. So, whenever we price a loan, we get a matrix, and the matrix starts at this and it goes to this, and usually on the top end of the sheet and the bottom of the sheet is rates that are almost impossible to get to. Almost impossible. And the reason they're impossible is because depending on the type of loan, you can only contribute so much money to the loan. Some 3%, some 6%, some 9%. But on my matrix right now, I think the lowest I see is, what do you see? 5 flat?
Five flat? I priced the 5 1/4.
Okay, 5 1/4. So the lowest we see on the matrix right now is 5 1/4, which means that's the lowest you can possibly buy down to on today's matrix. And it changes all the time. So we pull it on every loan. Every time we're doing it, we pull it because it's particular to that one person. Now, occasionally we get someone who's wealthy and says, hey, I want to know how deep I can go. So I'll ask for off-sheet pricing. That's right? Off-sheet pricing. I ask for off-sheet pricing. And they'll pull all the laws and everything, and they'll say, we could go this far. And my guess is, we got a thumbs down, dude.
What?
I don't know. Somebody says thumbs down. I don't know. That's on
They're like, off-sheet
Instagram.
pricing.
Yeah, on Instagram. They're like, no.
Give me
They're
the
like,
sheet
You can't
pricing.
do that. You can't do that. Yes, we can. We can do off-sheet pricing. And then we have to overlay the matrix, the type of loan, how much we can buy down. Some you can buy down up to 3%, some down to 6%, some down to 9%. They're all different based on your scenario. So, could I get a 4 right now? Don't think so.
Yeah, I don't think so either. Ed Weezy, I have an owed balance to the IRS, but no payment plan yet. Do I have to pay before applying?
Ed
Good
Weezy,
question,
that's
man.
a very good question.
And put that up front with your loan officer.
Dude, and
yeah.
it sucks. It sucks. Here's why. Okay, so if it's an old balance, further than last year, we're going to have problems. I'm going to be honest with you, we're going to have problems. If it's just for the most recent tax year, maybe no problems. Maybe. Here's why. Because let's take a number, $30,000. You owe $30,000, but you owed for last year. But you're good all up until now. Well, you can just say, hey, Mr. IRS, I just want to do into an offer installment program. That's it. And if it's only the most recent year, IRS is like, hey, you've been good with us for the last 30, 40, 50 years, however old you are. So, yeah, we're good. No problem. Don't even have to double check it. Don't have to know anything. Just have to say, hey, this is what I'm going to do. I'm going to pay you. No worries. That's if it's in the last year. If it's 2 years or older and you haven't voluntarily gotten into it, you're in arrears. And IRS is not happy about it. Not happy. Zero happy. So, if you voluntarily walk in, the guideline's going to say, I need your offer installment agreement and one payment. If you voluntarily walked into it, if they put a lien or a levy or a notice or anything at all on you, they're going to go, okay, you didn't voluntarily go into this one. The IRS came after you. And after they put your head on the hood of the car and then they handcuffed you, you said, all right, I'll pay. Now the guideline changes. The guideline's going to I need your full offer installment agreement and 3 physical months of showing that you have paid this on time. Not 3 payments. People get that confused. 3 months of payments. And then I factor in that payment and move forward. So,
yeah, I'm going to give you a hack on top of that.
We deal with this all the time, by the way. It happens. A lot of people do it.
I'm going to give you a hack, guy. This is for all of you that owe money to the IRS and you want to buy a house, okay? Now, I know the intent is to pay it off as soon as possible, so do that, okay? But when you get into an installment agreement, you get a monthly payment. That monthly payment will be factored in your DTI, your debt to income ratio. So if it's $100 a month, $1,000 a month, that's going to count against you. The IRS will allow you to go up to 84 months, 7 years. So when you do your offer installment, you're going to put in the terms. You're going to say, I owe this. They'll have the numbers. And I want this. So you're going to put 7 years, 84 months. That'll stretch it out the furthest to give you the smallest payment to make your home buying process easy. And then after the fact, make whatever payment you want. Have that automatically come out, make an extra 2, 5, whatever you want, and you'll get it paid off in time. But we want the smallest payment for your home buying process.
And we're very experienced in this. We've literally showed up to the IRS home with tax returns so that we can get them stamped, so that we can bring them back to an underwriter, so that we can get a loan approved. Like literally, we've done that handful of times where we have to drive to the local IRS statement or building, which is on 4th Street in San Bernardino. I hate that I know that, but we've done this a lot. We deal with this stuff a lot. Yeah.
My Mammy of Zero. Hi, mortgage guys.
What's up, Mammy of Zero? You're one of our favorites. When we do at the end of every live, we kind of debrief and we post game. And we see the people who have watched us and commented us and who are come back and over. Mammy of Zero, respect, much love to you. We've been watching you watch us. Thank you very much.
Lup. Troby7, thank you for the love. Jada88, broker told me DTI is too high and got denied. Is DTI... Okay, so Jada88. So there's a problem there. You're not denied at all. Yeah. All you have to do is bring down that purchase price below the DTI, and then you're approved for that amount. So what that means is your loan officer's not directing you correctly. It sounds like, I'm not going to shoot at them. I'm sure they're great. I'm sure they're great. But if you want a second opinion, give us a shot.
Yeah, give us a shot. By the way, if you're going broker, there's a difference between a broker and a direct lender. Neither one's better or worse. There's pros and cons to either side. And I'll give you what they are. If you want, just ask.
Jaden Still said, is DTI 18% and credit of 715 good? I think you're showing off.
I think you're flexing.
I think you are showing off.
You're like, hey, I've been to the gym lately. Does that look good? You're like,
a little more, bro. A little more.
Now I'm showing off. I'm like,
no, that's fantastic, Jaden.
A DTI of 18%. You're golden. You can do whatever you want. Every loan officer, every bank wants you. That's gold. You're gold paper.
Al Sherman, we purchased a house in September at 7%. What interest rate should I wait for to refinance?
Well, it's going to depend. That's a good question. 7%. So I'm going to say, if it were me, first thing I would do is make sure that I have all of my data in front of my loan officer so that I know what's out there. Because there could be things that factor it a little bit different. And then make sure you have a good loan officer. And then one that's not just trying to make commission. Because if you're at 7% right now, let's just say a year from now we're 6%. Will it make sense to refinance to 6%? It will. It will. But is it the smartest move? Well, if you think it's going to 5, and then you think it's going to 4, and you can possibly buy into the 4s and even to the 3s, well, then you're going to refinance and pay $3,000 to $5,000 when it's at 6, and then your loan officer is going to tell you to do it again at 5 and at 4, and mathematically it will all make sense. It will. But when you look back over 4 years, you're going to go, hey, I refinanced 4 times, and each time it cost me $5,000 or more, and I'm ultimately down at this, and I started my clock again 4 years later at 30 years, 25,000 deep. So, is that the smartest? And I'm going to say probably not. Probably not. if you have an idea of what's going to happen in the market, and nobody has a crystal ball, but we do listen to the chairman of the Federal Reserve, who's Jerome Powell, and he says right now we are at 5.25. That's right here, 5.25, and that's all the Fed members right there in their agreement. And then over the next 3 years, this is what they believe is going to happen to the market. But the one thing they're all pretty consistent on is 2.5% at the end of 2026, 2027, somewhere in that range. So they're trying to softly land the market. That's what they're trying to do. Not real brain surgery. If you follow it, if you're in our business, you kind of know it. So when is the right time? If it were me and it was my forever home and I was going to refinance, I'd refinance once. I'd see if we can get into the 4s, watching every day what's going on. If I can get into the 4s, I'd spend a boatload of money to get it into the 3s, possibly the 2s, and then never touch the loan again.
Yeah. Eli Sherman, we purchased a house. Oh, that's the one we just did.
Yep.
Kelly Boy, did you know what the rate is in Texas for buying a manufactured now? It's gonna be the same as the rates that we put out, maybe an eighth higher, about an eighth higher. Manufactured and condo do have a little bit of a higher rate, but it's the same as everything else, just an eighth higher. Jada88 got the lingo down. Sorry, not approved. You got it.
We want to help you. That's why you should tune into us. Whether you use us as loan officers or not, we're very good sounding boards. You can check your loan officer in a lot of crap. People come to us all the time because their LO couldn't pull it off. Or my loan officer told me I needed a 620 to do a VA loan. And I say, really? Is that what he told you? Yeah, he says the bank won't do a loan without a 620. My answer to that is going to say, if your loan officer says he needs a 620 to do a VA loan because his bank won't do it with a lower 620, then your loan officer may be right at his bank for his scenario. So he may be right. I can tell you that the VA guidelines have zero reference to FICO scores. They don't care. You could have a very low FICO score. But if your bank puts in an overlay and says, I won't lend to somebody a 620, then your loan officer is technically correct. And I will tell you that because everybody has Google, you can pull up the VA guidelines. They're out there. They're just like things you don't want to deal unless you're in the lending business. But the VA guideline, there is no requirement for FICO score. A VA is technically a residual-driven loan, which is a different way to factor things. And the VA doesn't give you a loan. The VA doesn't give you the loan. You know who gives you the loan? The bank. The bank gives you the loan. The VA guarantees the loan or insures the loan. The VA insures the loan. So if the bank says, hey, I'm not lending to anybody under a 620, guess what? That's their money. They get to say that. I can tell you that my bank doesn't do that. If it did, I wouldn't work here anymore. I would be like, bye, 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 bye.
Paranoid Nobody, Debbie Michael, Sweeto, thank you for the love. Green
Appreciate
Elite
you.
Landscaping, how much do I need to make to afford a $300,000 house? I'm going to use my brain and I'm going to guess somewhere between 60 and 80 grand a year.
Yep, 60 and 80 grand a year, you're good to go with no debt.
There you
with
go.
no debt, yeah.
Eric, best recommended state for rental property, please.
Well, I'm going to start with which ones you shouldn't buy rental property in California. Do not buy rental property in California. It's horrible. I own rentals in California. It's horrible. Are we live on that?
We're live on
Okay,
everything,
cool.
man. See the button that says live?
All right, I don't see nobody there. Like, that's really weird to not see people.
I don't know.
Anyway, so I'd stay away from California. There are some rent-friendly states, and they're probably your flyover states, like Michigan. Give me one.
PA?
Pencil. No, I don't think that's
on the coast.
That's on the coast.
I don't know, man.
Dude.
Hitting me with these crazy questions. Ask me about loans.
Arkansas. Yeah. So if you're looking for rent. Ohio. Yeah, Ohio's a big one. Yeah, Ohio's a good one. So here's the problem when you're trying to become a landlord and do rentals. Here's the problem. If you try and do it in California, just to get a beat up house in the Inland Empire, you need 600 grand.
Insane.
600 grand for a beat up house in the Inland Empire,
Old
not on the
house.
coast. 600 grand.
Smelly house.
Do you know how much the mortgage is on a $600,000 house? How much?
Let me see. You're going to push about 4,800.
4,800. Do you know how much you can rent that out for? 3,500.
Probably.
So if you're paying 4,800 in rent and you're renting out for 3,500, you're losing $1,000 a month every month. Why? Because the purchase prices are too damn high and the interest rates are too high. So you have to find a spot. if you're doing it strictly for business purposes, you have to find a spot where when you buy it, the mortgage is X and you can rent it for at least that and probably a little bit more because there's going to be costs. There's always costs. And when we say what's the best rental places, that's where I come up with, would you say Ohio? Ohio's a good one.
Ohio.
Yeah. There's a few out there that are good for that. But if you want a favorable spot like Florida, New York, Los Angeles, San Francisco,
Miami?
Chicago, Miami, any of those places, it's not really smart to do it there because it will not debt service for a very long time.
Portland's probably still really expensive and it's shitty.
Yeah.
Let's see. Lizzie loves you. 91. Do you do out of state sales? I'm assuming loans. I'm in Florida.
Lizzie loves you. Lizzie
You.
loves you.
You.
Huge.
You.
Huge.
The answer is
Cool.
yes, Lizzie.
Yes,
we do
we do.
all 50 states.
All 50. How
50
many
of them.
How many states are there in the union? Here's a hint. We do all 50. How many contiguous states in the U.S.?
50.
No, 48.
48.
48. Which are the
That means
non-contiguous states? Yeah, you're right. Good. That was good.
But Alaska's still connected. I don't know why you always do that.
Okay. Well,
Freaking science.
Puerto Rico's not.
Or what is that, geography? User
Puerto Rico's not a
2933.
state.
It's not a
I'm just
state, man. What loan amount can I qualify for with a salary of $81,000?
More than your salary, which is a very important part. We got to know what your FICO score is, but I'm going to say you're cracking 350. 350,
Nice.
yeah.
Nice. Lizzie loves you again. Salary of $180,000, but I have 2 car loans. How much do you think I could spend on a house?
First thing I need to know is what the heck do you do for a living,
180
Lizzie?
G's.
What do you do?
She works with Ben Shapiro.
Salary.
Florida. She's a football player.
Salary. Yeah,
Football manager.
that's badass. So you're probably cracking 740, 750, 760. Depends on how much those car loans are and what your property tax base is.
Yeah, there you go, Lizzie. Larissa, build a house now or buy something with a set number? Question mark, question mark, question mark.
Unless you actually build houses for a living, I don't think it's a good move. It's very, very difficult, and a lot of people try and fail. There's actually FHA one-time closes, VA one-time close, and there's even a USDA one-time close. But I don't recommend them because if you, let's say what you do for a living is you're a nurse, you have no idea how to build a house. No idea. And you're like, hey, I'll just figure it out. That's like trying to figure out surgery after you got somebody cut open. Probably not a good idea.
We got a ton of questions from all 4 million of you. We're going to get to every single one of you, but it's time for a commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officer, Chris and Lee, at New American Funding. You can do that by calling the number on the screen and they will get back to you. Hey, don't call right now because we're live and we can't answer. But as soon as we're done live, give us a call. We'll help you out. Bye.
All right.
Dude,
Larissa.
we're getting a lot of people trying to get the live. We're not we're not going to join your live, but we'd really appreciate you. We do
Yeah.
appreciate you. At some point, we may do it in the future. I've seen where people go live on this side, live on that side. Chris and I are a team. We get to bounce things off. By the way, we would like some feedback. If y'all see other loan officers on TikTok and you have some comment on how they do it and how we do it and how we could do it better, we actually want to do it better. We know the guidelines, but we want to make it entertaining and fun so that we can help you get your house in 2024.
DH137. So I make $90,000 a year. About to sell my home for $250,000. Looking to buy one at $275,000. What to do? I own my home as well.
That's simple, dude. That's a DH, dude or girl, whatever, dude, chick, whatever, is not offending. Just call us and we'll get you the house.
Dang, that's an easy
That was
one.
easy. Yeah, that was so easy.
DH, thank you for the love.
Yeah,
Jessica,
appreciate
thank you
you,
for the
man.
love.
Appreciate you. And
Javi.
if you're a loan officer, we like you on our feed. We like you shooting at us. If you think we're wrong on a guideline, please come at us. Please come at us. Please.
Javi, I'm going to have to disagree with you. He said it's easy. Just visit va.gov.
Yeah, just simple. Yeah, you can figure out all the guidelines just going to va.gov. You can find the guidelines, and va.gov is the right place.
I'll give them to you.
But they'll go, it's pretty deep. We have something called all regs, and we dig in because you can find the guideline, but you have to find out if it's the most recent guideline because the archived guidelines are still there, and you could be quoting an archived guideline. And if you haven't gotten the update, could be in trouble. But you're right. You can do the research. You can, and we recommend you do.
All right. Toby, yes, my son and I bought land together, so we're getting ready to build. We have to, and that's where it ends. Toby, finish that statement.
Toby, we want to know.
Javi, what about VA home equity? How does that work? Well, just go to va.gov.
Yeah, just go to va.gov. Yeah. So VA, home equity loan.
I think taking it out.
HELOC.
Yeah.
Well, VA does up to 90% in most cases cash out refi. They don't do 100%, right? 100%. They stopped 100%, right? They don't do 100% anymore because too many people were maxing that house, and the VA is like, oh, this could be bad.
Yep.
This could be bad. So they throttled back the guideline. It's probably the best, most liberal cash out loan out there, and it's 90% LTV, and that's how you want. Do they have a HELOC? No. Simple. No.
Can you do a HELOC in addition to your VA? Yes.
Yes, but it's not a VA loan.
Yeah.
But it's not a VA loan.
Correct.
Yeah.
Larissa, I got approved for $2 million. Want to be around 1.5. Should I build or buy?
If you're at that level, depends on how much cash you have, because some of it is not going to be able to be built into the loan. Now, if you drive around any neighborhood and you see a house that was going up and then all of a sudden it stopped going up, and then the wood just starts to decay over time, it's because they ran out of money and they're trying to figure it out. And there's a lot of these houses in America. Now, if you hired a general contractor and that you're at you're millionaire, because if you're buying a $2 million house, you're approved for $2 million. You live at a whole different level. You can hire a general contractor that will guarantee this whole thing will happen and will put his license on the line. If you have that kind of money, then maybe building is not a bad idea. But for the average Joe who's buying a $400,000 or $500,000, $600,000 house, you don't got $100,000 to give to a builder, because the best way to do that, I've actually done this, is called cost plus. You tell, hey, Mr. General Contractor, I'll give you $100,000, and then whatever it costs to build the house, I'll write the checks as we go. That's called cost plus, because the general contractor has to make his money one of two ways. He either bids it out and puts a little bit on top of it. So concrete's going to cost me $50,000. Well, I'm going to charge him $55,000. I'm going to make the $5,000. So the contractor, the general contractor, is constantly trying to make money all the way through the process. That's how they make money. Or you can do cost plus. Cost plus is you make $100,000 no matter what it costs me to build this house, and I'm going to make sure you're good for it. And by the way, if you do this, make sure you get an experienced general contractor that's been around for a very long time and has no lawsuits and nothing against them, because this is a very difficult process. So at your level, it's a little different. For most people, I say probably not a good idea to build.
Agreed. Lizzie loves you 91. My husband is an over-the-road truck driver.
Love it.
Yeah, those guys are ballers.
Yeah, they're
good
ballers.
Good job, Lizzie.
Yeah.
Hang on to that one. Christian Noel, you guys are awesome. I look forward to watching your lives every day. You always have great info.
Appreciate you. I think she's an LO too, right? Christian's a LO. Are you an LO? We appreciate you if you're an LO.
Thank you, said DH. Let me see the numbers again. Here you go. Everyone, you got
phone number.
Screenshot it.
If you need a badass loan, call your badass loan officer. You can reach your badass loan officer by calling these numbers after we're live. That's it.
Right. Mega Baker. Can civilian government workers get a VA loan?
Nope.
There you go. Javi, thank you, gents. You're welcome. Yes, I want to improve.
Trying to keep up. I'm telling you, that just looks strange. Doesn't it look strange?
My house.
Yeah.
It does.
Yeah.
I don't know what it is.
Okay.
You know these social medias.
Yeah.
Terry, do you refinance mortgages?
Mortgage hours. I like that. Terry G, do we refinance mortgages? Yes, we do. We do refinance. Now, is it a good idea to refinance right now? Unless you bought like 9 months ago, probably not. And the reason is because rates are still pretty damn high. They're pretty damn high. Fed funds rate is at 5.25 and 5.5. This is from the FOMC website. Fed fund rate, there's a FOMC committee. They actually set the Fed funds rate. That's the whole committee right there. They set the Fed funds rate, which basically means they choose the way the U.S. economy is going. It's not entirely up to them. There's market factors, but they do have a very powerful say in things. And right now they have the Fed funds rate set at 5.25. But over the next 2.5 to 3 years, they have it going down to 2.5. They're almost unanimous that it's going to be at 2.5, end of 26, beginning of 27. So when is the best time to refinance? Well, when the mortgage rates are best.
At the bottom.
At the bottom.
Terry, thank you. Krill, best hard money loans. The ones that don't break your legs.
Yeah, the hard money. Yeah, you can get hard money from the mafia. They'll break your legs if you don't pay. But hard money's not pretty. It's not pretty. It's not pretty. I quoted somebody not that long ago, and I'm like, hey, I got your quote. It's amazing. It's a pretty damn good rate. They're like, oh, cool. What do you got? What do you got? I said 9.5%. They said, what? Are you crazy? 9.5%. I'm like, yeah, that's a great rate for hard money. They're like, no, it's not. I'm like, where do you price your hard money loans at? Because I know mine, if I get 9.5 right now, that's a win.
Heck yeah.
Because I'm getting 11 and 12 for most scenarios.
Javi, thanks for the love. Morgan
Appreciate
B.
you, Javi.
My husband's self-employed, but doesn't have 2 years filing the 1099. How can we get approved in Texas?
Yours is going to be, all my exes live in Texas. So the 2 year, that's going to be a problem. 1099 is going to be a problem. We have to figure out your income and whether or not we have to use that income moving forward. Because if you're W-2, it's pretty simple. We know how much you're going to report to the IRS. We know that. And you only get so many deductions. So we know what you're going to make. There's actually a loan called a W-2 only loan where I don't look at the tax returns. But if you're 1099, you can make 100 grand, write off 100 grand, and you made zero. And if you're telling the government, the IRS is the government, that you made zero, you can't turn around and go to the government and say, hey, trust me, bro, I make a lot of money. Because FHA is the government, VA is the government, USDA is the government, and then Fannie Freddie are GSE, government-sponsored entities. The government has a say in what they do. So that's why 1099 is harder.
So here's another piece. If you're willing and have the ability to put 20% down or more, we can use a non-qualified mortgage, which is not traditional financing. So no Fannie Freddie, FHA, VA, USDA, none of that. It is private money. It is the in-between traditional and hard money called non-QM. So we can get you in that if you have 20% down. If not, file those taxes and then we'll get you into a home.
Yeah.
DH, got it. Thanks, y'all.
We're here for you. Christian Noel, what is a hard money loan?
Good question.
Hard money loan, very good question. Hard money is like, hey, I don't qualify for FHA. Hey, I don't qualify for VA or USDA or Fannie or Freddie, but I got an amazing deal. An amazing deal. I got a house that's worth 400 grand. I can get for 200 grand. Who can lend me that money? Who can lend me that money? Well, there are people out there who will lend you that money, but it's not going to be pretty.
Nope.
And I want you to think of the worst scenario you can possibly think of watching The Sopranos. And they say, hey, I'll lend you the 200 grand. Don't worry about it. Yeah, don't worry about it. Your first payment is due sometime in the next 2-3 months. And if you don't make it, I really hope you like your kneecaps. And if you do, you'll make that payment. It's not that extreme, but hard money is they want a lot of money up front. The interest rate is ridiculously high, and there's usually prepayment penalties on hard money loan because it's not very profitable unless they make money up front. Remember that the banks make money over 30 years. For the first 15 years, most of your money goes to interest. So that's the bank. The bank makes the money. But if the hard money loan is like 12%, they know you're not going to stay in it. The minute you can get out, you're getting out. So guess where they got to make their money? Up front. And they do. They make their money up front. And if you don't like it, don't take the loan. Pretty simple.
You're correct, Christian Noel. Like foreclosed homes, these are mainly for investors and flippers. Mm-hmm. So you see that crappy little house that someone fixes up, throws some paint on it, new windows, and makes it beautiful, and then sells it for a lot more. It's those people. So they use the hard money to buy it, they sell it, pay the hard money back, and they do it over and over and over again. So Christian Noel, the fact that you made that leap, pretty cool. I like the way you think. You got a good brain on you.
But those guys get caught a lot, especially recently. They're like, hey, I'm a flipper. When rates are low, it's easy to be a flipper. When the market is ascending, it's easy to be a flipper because you're like, hey, I'll take advantage of Granny who needs to sell that house and has no idea she's giving me $100,000 in equity, because that's usually what it is. Or that divorce is happening and they don't care how much money they lose. That's usually a distressed property of some sort. So the flipper comes in, carries it for 3 months, fixes it up, and then sells it to the market, and they make money. So flippers do that. But there's a lot of kids who walk in, they're like, hey, I'm a flipper, I'm an investor. and they have no idea what the hell they're doing. I see these people. I know these people. These people sit in my office all the time. They're like, hey, I can do this. I can do this. I'm like, be careful. Most important thing is carry costs. Don't forget carry costs.
Ooh, what are carry costs?
You're like, what are carry costs? I'm like, you have this plan for 3 months, and if everything works beautifully and you do this exactly how you're going to get done in 3 months, and you're right, you make a lot of money. But if you get one hiccup, the weather goes bad for a while, and you couldn't replace that roof because it rained for 7 days straight.
Freaking California.
Yeah, you couldn't do that. Well, now you have something called carry costs. And if you didn't plan those carry costs in, they will bury you. And when I see a brand new 28-year-old kid like, hey, you don't understand how smart I am. I'm like, smart's good. It's cute. It's nice. Experience is way better. It's way better. Why? Because you'll have a backup plan for carry costs and another backup, and you won't land up losing and hurting people on the way out. By the way, there's a bunch of these guys that are doing subject to. Yeah, I get calls on this. I'd say stay away from those. Yeah, stay away. And if you want to know, ask.
Yeah. Eric back in the house. I have a property worth $450,000. Only owe $150,000. How much can I get qualified for them? Prose? I don't understand that question.
It looks like X processor.
Are you okay? Are you trying to cash out? Is that what you mean? How much cash can you get out of those houses? Mm-hmm. Is that what you see?
I have a property worth $450, and I only owe $150. So you have $300,000 in equity. How much qualified for loan from them? Which means it sounds like there's more than one property or more than one borrower. I'm not sure, but I'll give you a simple guideline, especially if you're an X processor. I'm not sure if that was, but 450, just do 80% LTV, sometimes 85, but just 80% LTV, 80% LTV. So a $450,000 house, I would drop 90 grand off of that. So you'd be at 360, and then I would subtract the 150. So if I subtract the 150, you probably get about 260 to 280 after expenses and costs and everything. So 260 to 280 cash out. That's just rough, dirty numbers. I'd have to pull your credit, FICO scores, full assessment, all kinds of stuff. I haven't even factored in your income. Income is a very important part of all this, but that's just a dirty number real quick.
Dirty. Amanda Sierra.
I just did a dirty.
I have 598 FICO and hubby has a 602 FICO. $110,000 combined. Do you think we could qualify for a house?
So Amanda Sierra.
What do you think?
Amanda Sierra, yes. So yes.
What do you think?
Yep.
What do you
yes,
think?
yes, and yes. And then
you got it, Eric.
Yes. But here's something that's cool. You guys are close. 598 and 602 are pretty close. FHA starts at 580. And there's a recent guideline under a certain loan that I can do what's called blended credit. Blended credit. Blended credit means I catch that 580, I catch that 602, and then we blend the two together. And for you, it's just simple math. It's 600. So your operating FICO is 600 instead of 598. Because under a traditional FICO setup, I would take the high, the low, and then I would, if you're married, if you're legally married, I would take the lower of the two and use that as your operating FICO. However, there's a few programs out there where I can go, you know what? I'll take the high, the low. They're legally married. I'll blend them, and I'll be at 600. The difference between a 598 and a 600 is night and day. Like, because you're in the 5s to 6s, and at pricing, at interest rates, and a whole bunch of stuff. But the one thing I would highly recommend, you call us, we pull your credit, we find out what's causing that. Because if it's something recent, it could be a hard stop. What's a hard stop? Hard stop is if you file for bankruptcy in the last 12 months or last 4 years, you could be hard stopped. If you have a foreclosure, you could be hard stopped. If you have a BK13 that doesn't have enough payments, you could be hard stopped. If you have a BK7 that isn't seasoned, you could be hard stopped. There's a lot of things that cause hard stops. But the way you'd absolutely know is to call us. We pull your credit. We tell you where you stand. And then we either send you to credit repair. We got a handful of people we use. Some people, we even have one up on our links at the top of all our social media. Finally, we got some comments on that one.
Yeah, Taco Dom in the house.
So we got links at the top of our social media where you can log in and do that. We vet these people. And if they make our customers mad, we just get rid of them. We get a lot of customers that need credit repair. And because of that, if somebody makes my customers mad, I get rid of them. And I tell them when I talk to the people, I'm like, hey, listen, it's simple, guy. I don't care what you charge. I don't care how long it takes. I don't care any of that stuff. The only thing I care about is my customer happy with you. If you gave him value for whatever you charge, I don't give a shit. I don't care what you charged. But if my customer calls me mad, I'm going to call you third party with the customer on the line. And I'm going to say, hey, tell me what the problem is with this credit repair. Well, they're not answering my call. They're not doing this. They're not doing that. Okay, did you hear that? Yeah. What are you going to do? I'm going to solve it, Mr. Duran. I'm going to solve it. Okay, cool. Solve it, and I'm good as long as my customer's happy. My customer's not happy, you're fired. I move on. I can change a credit repairs person's life with how much people we get. Anyway, moving on.
Amanda Sierra, we've never bought a house. Okay, so this goes for everyone in here, not just Amanda Sierra. If you've never bought a house, I recommend getting pre-qualified. Doesn't cost you anything, doesn't impact you negatively, but it will absolutely let you know where you stand. Because if you have crap credit and can't buy a house in the future, we need to fix that now. If you don't make enough money, we need to fix that now. If you don't have the down payment, we need to fix that now. Because you will want to buy a house down the road. And here's the thing. So Lee's been showing this chart every single day, how the rates are trending down, and by 2020, whatever, they're going to be here, they're going to be there. But here's what happens. Rates are here, values are here. As these rates start ticking down, guys, the values are going to start skyrocketing. Absolutely. And if you barely qualify now, you will not qualify then. And if you do qualify, you're going to be priced out of that neighborhood. You got to move to a lesser neighborhood, not as nice for your kids and your family, blah, blah, blah. You get what I'm saying. So if you're motivated and you want to make this happen, reach out to us, call us, screenshot this right now, or you can go to the link in the bio, click for apply for a home loan now, and get the process started.
So what are the best, easiest down payment assistance programs around? Okay, Lance, you just asked a lot, and I'm going to tell you. I don't know if there's a best, because it's kind of like none of them are great. None of them. But they all can help in a certain scenario. The best scenario is bringing your own money. But if you can't, there's some that are silent seconds, which means they're a silent and they're a second loan. They don't show up on your credit report, but you do owe the money. Now, here's the problem with that. If I qualified you for $400,000 on most of the silent seconds, $400,000 with you bringing in 3.5% down, the minute I put on that down payment assistance program, you drop to 320. What? Your buying power drops that much. Why? Because they're literally giving you the down payment. They're not going to let you redline that. Redline, that makes sense, right? Everybody says, well, I guess since you put it that way, yeah. Okay, cool. So there's another one that, hey, you don't have to pay it back. It's a grant. Oh, I love that. Love grants. Yeah. Wait a minute. Why is the rest of the market at 6% and I'm at 7.5%? Well, because it's a grant. They're making their money back in the interest rate. What? Yes, they're making it back in the interest rate. So all of the down payment assistance programs have some type of catch to them. Some type of catch. However, if I did have great income, and that's the only time the down payment assistance programs are really good for you, is if you've got great income and you don't really need them, but you kind of maybe want to use it because you want to keep your money in cash, well then maybe it's good, and I would go with CalHAFA. That's probably what'd you do?
Yeah, same. Yeah, same. Daddy, cool. Two stacks. Are you able to blend the FICOs if one of the spouses doesn't have a 2-year work history? If you're both going on the application.
Yeah, but we probably wouldn't want to, because if you don't have a 2-year work history, unless I solve that, I probably don't want them on the loan, because I won't be able to use their income. And if I can't use their income, I have to use their liabilities because they're on the loan, and all it does is hurt the loan. I need to make sure that the borrower that's going on the loan is a net positive for the loan in that situation.
Yeah, so it's possible. Yeah, you can definitely blend those. Callie said, Christopher, what's up? What's cracking? I think we're going to get you an update today.
Are they yelling at you? Are they yelling at you?
It just says Christopher. How would you think they're yelling?
Dude, Christopher.
He's not so smart.
It's Chris and Lee. It's Christopher is when your mom's mad at you.
No, see what she's doing is she's trying to separate us. She's trying to say, hey, just Christopher. And I don't like it.
I don't want to talk to Lee. I don't want to talk to Lee.
Yeah.
Somebody's beating on my shirt yesterday.
Oh, second favorite Maddie in the house. How you doing? Tasha, is there a monthly service fee? Well, this one's got to be fast, dude. We're going to
Yeah.
run out of time.
Okay, cool.
Monthly service fee of credit repair. Tell me where to get credit repair. Hurry.
Most places, yes. Nobody does anything for free. If they're doing it for free, there's a catch somewhere. There's always a catch. I would rather pay somebody than get something for free because there's a catch. Yes, most credit repair companies will do a monthly fee, and I want you to think about that because it's in their best interest to keep you as long as they can. But that's why I tell you, the minute my customer's mad, I get rid of them.
Yep.
And we've gotten rid of 50, probably 50 over the years because people come to us like, hey, I'm in credit repair. I'll help you. I'm like, cool. Let me vet you. Let me see if you're real. Then I'm going to give you a few of my clients. And if they tell me you're good, then I keep using you. But the minute they tell me you're bad, bye, you're gone. I don't care.
All right, I'm Chris. That's Lee.
We've been Chris and Lee. Talk to you later.